So again, welcome everybody. My name is Sam Seiden. We just had a session a couple weeks ago, and the markets are moving here, which is good for us. Be able to really hopefully apply components that we're going to learn today. So often when I'm in here, we cover the simple, basic, and very real concepts of supply and demand, right? Identifying price levels on the charts, on the Forex charts, when the risk is low, the reward is high, and when the odds are stacked in your favor, okay? So on the patterns that represent a supply and demand imbalance. Let me start with this Euro-Yen. We could start with this one right here, okay? Now, for those that have been here for quite a while, you see some very familiar names. When we look at this potential turning point to the downside, right? Okay? So let me wrap some lines around this area. Actually, I'll use a yellow box today. I think that'll make it a little clearer, okay? But we're going to add something very important to what we usually do, okay? So there you go. So what I've done now is I've shaded in that area. We have variable base. We want to put our bottom line right at the bottom of the key here, and our high price stop on the other side of that area, okay? So, and we want to carry that level forward. Now, notice on this chart I have Bollinger Bands, okay? So today, what we're going to add to what we normally talk about when we talk about supply, demand, turning points, setting up the entire risk, high reward entry points, right? Okay? Yeah, Jason, I figured you meant in the 124 area. So Bollinger Bands isn't enough to risk, high reward turning point, okay? But what we do in the at Online Trading Academy in the trading rooms, by far the most popular kind of strategy we use, okay? It's combining Bollinger Bands and key supply and demand levels. And notice I said the word key supply and demand levels, because we're not taking every supply and demand level we see out there. We're taking only the significant ones that have a bunch of our odds enhancers, making them key turning points, right? All right, so what we're looking for, we want to see prices reach this upper level and pierce the upper Bollinger Band at the same time. If we have that, if that's happening, that's telling us two things. Number one, price is reaching a level where, the chart is telling us supply exceeds demand, so that's good, okay, for a short position. And if price is piercing the upper band when that is happening, we know that price is at least 2 standard deviations away from the average, right? Away from the mean. Okay, does everybody get that? So we're kind of using this to help stack the odds in our favor. Because there are plenty of times when prices will reach a supply level, for example, that's just so-so. It's not a great level. And a lot of those times you're not piercing an upper or lower Bollinger Band. So this just helps us, gives us a little bit more of that edge that we're looking for. All right? So what we're going to do is go through some longer-term charts and put some of these in. And then I've got another workspace here with some really small time frames, so hopefully we'll see some of this stuff in action. Okay? And let me back up here a little bit. Make sure I don't miss any questions. Do you look for how price closes near the top of the Bollinger Band? That's one question from Nev. No. All we need, Nev, is prices to touch that supply or demand level and be piercing the upper or lower band at the same time, right? Okay? Because if you wait for the close, that means you're going to miss, all your best entries, because your best levels, price is going to touch that level and turn right away. So if you wait for that candle to close, you're probably far away from your low risk entry point. It's not low risk anymore. Okay. Abel, yeah, that yellow band up there, that level is pretty far out there on the curve. So, yeah, I would wait till prices got up in there for this opportunity, okay? And I'm just reading back here. Yeah, we can talk more about the banks later on and all the things they do. Again, I started my career at a trade desk in the Forex market. So, that's actually where I started my career in that side of the game. Okay, so we can talk more about that later on. Okay. Yeah, current price can certainly be at supply up here. In fact, I had a line in there earlier today. I just took it out. Okay. Yeah, so Ezra Master, I see your question there. saying this level was already a level that it was a double top. Yeah, from before. If you look to the left of that, there's another area up there. But because of how prices left this level again, that's fine, right? In other words, price moved away from that level at least 3 times the distance of the level itself. So that makes it a new level, a new fresh level that we would want to look at, okay, or want to take. Let's see, Windrunner, Sam. What if you, what you do if your entry got you 2-to-1 in reverse before it reached 3-to-1? It depends what your rules are. Some people will move their stop to break even at 2-to-1 and then take some profits at 3-to-1. I myself would tend to not do that. I've done that before. It's okay. But I'll tend to either hit my target or get stopped out. I'm not that big on moving stops too much. All right, so let me keep going here, and then we'll get back and let's see. Yeah, so Brett, we're going to go through a lot of that, a lot more of that. All right, let's move on here, and let me just grab the chart again. Okay. Yeah, so someone was looking at this area right here. Let me draw this area in where current price is at. And don't worry, we're going to look at plenty of markets today. So, yeah, there's another level right there you'll see in a second. Let's see. Windrunner, he says, do you find yen futures tough in this method? No, and like I said, I started my career in the currencies on a really big trade desk, and I could tell you once I started trading on my own, the market that I had traded probably for a year and a half before I traded any other market was the Japanese yen. If there's one market that I've traded more than anything else, it's definitely the yen. No, I'm a big fan of the Japanese yen, but again, I don't. You know, these markets are all, they're, you know, I like the yen, but I like the euro, I like the S&P. I mean, they're all markets. Behind the candles are just people, okay? All these markets, you know, the movement of price in any and all of these markets is simply a function of this ongoing supply and demand equation, right? Okay? I guess I just feel strong about the yen because that's where I started. But it's no better, it's no better of a market than any of the others there, right? Before I move on, though, one thing we talked about last time we were together, a couple weeks ago, and I want to just point your eyes to it, is the dollar. Remember we were talking about the dollar? Okay? And the dollar was down here at 80, and we said, you know, the next likely move and then the next likely turn is likely to be up here in our supply level. As you can see over there on the left, price is getting fairly close to that. It's not there yet. I don't know that it'll get there today. But that's certainly something that is going to likely drive currency prices next week, right? I would watch for that in that Sunday open. Okay? When the dollar gets there, we want to look for some euro demand levels, some yen demand levels, some pound demand levels, right? Okay. Let me make sure I'm not missing too much here. And there's a lot of questions coming in, so I'll try to get some of these and then we'll move on. SW1, you can find if you want more information on this stuff, kind of more of the basic lessons I've done in the past. There's a bunch of recordings on FX Street, the FX Street website. There's more on the Online Trading Academy website. They're all free. You know, take a look at those. No, Daniel, there have been some great turning points in the yen and the euro. Okay, remember, one of the key things you have to understand. Every supply and demand level is certainly not a level we want to trade at, right? Okay? In fact, like I've said before, you know, probably more than half the levels we find, we're not interested in. Okay? Just because they don't meet our minimum requirements, alright? And we run through our odds enhancers to figure that out. Okay. Yeah, trader, make sure you have all the rules too, okay? And I know it's tough because we don't always go over all the rules here. We have a lot of people that have paid a lot of money and put in a lot of time in the extended learning track program and Online Trading Academy. And, you know, when I'm writing articles and doing stuff like this, you know, I try to give as much stuff as I possibly can, without, hurting the XLT members because, But yeah, trader, before you're taking trades at levels, make sure you know exactly all, the rules around the levels, right? Okay. Okay. Let's see. Yeah, there you go. So that should help. Okay. Dorks, I wouldn't call U.S. dollar index a leading indicator, but it's certainly a, I don't think none of these markets actually lead each other. If that was true, there'd be risk-free kind of arbitrage there, and that's not going to happen. And that window would be closed up pretty quick. But that's certainly a guide as to what's coming next, where markets are going in the near future. And one more thing. Philippe's asking a great question. Do you take market profile floor pivots in consideration since you trade on trading desk? No, I don't. Market profile in a conventional sense, okay, it has a lot of flaws in it if you haven't figured it out already. I'll give you the short version. Market profile in a conventional sense, the way it's kind of taught in the books and stuff, they give every level out there equal value. And just think of the supply-demand curve, period there. That you can't give every level equal value, right? And where these levels are placed on the supply-demand curve is everything. So, there's a bunch of other little flaws. And as far as floor trader pivots goes, floor pivots, I've never seen anybody, be able to use those and be consistently profitable year after year after year. They're just a mathematical calculation. Now, when do those things work? They work when they line up with real levels, right? Okay. All right, let's move on here so we can get to some other charts. Okay. We'd look to buy, Andrea, if the dollar index hit that supply, and we'll go to the euro pretty soon and find some demand levels. Okay. Yeah, Tim, I agree with you there, and I'm not ignoring other questions. I'm trying to get back to everything here. No, Boyke, no. We try to put it all out there. Let's go to the euro. Okay. Hey, Boyke, believe me, it's a fine line that I'm constantly walking with that. So, if you have any advice for me there, I'm all ears. Always walking that fine line. Let's take a look at the euro. Actually, we keep talking about the yen. Why don't we start with the yen? We always start with the euro. Here we go. Okay, let me get rid of this big circle here. No, it's true though, boy. It's that is the biggest challenge, and it makes I've always had two sides of my life when it comes to trading. It's the trading side and the education side. And to be honest with you, the trading side has always been the easier job. On the education side, that fine line every week, you write articles, you want to put you want to put all the best stuff out there and everything, but you have to be careful because then it's not fair to the people that are in the program. So you're always making somebody angry. Okay, so let's again, if we focus on this dollar index, I'm just going to blow this chart up a little bit, and then I'll grab the charts for you again so you can see. Okay, so this is more for like next week. Okay, so if you look at the dollar index, we're coming up to that big area up there. Okay, we're getting kind of close to it. And the other thing, and we've seen this before, look at how prices are rallying up to that area. Okay. There's not a whole lot in there to stop. Let me just grab the chart again. There's not a whole lot in there, if you see that, to stop prices from falling, right? Okay. Carl, those are 2-hour sessions, and I don't do all the sessions. Okay. And they're usually 3 to 4 sessions a week. Yeah, so I took the upper portion of that trader, which is where that's the origin of the drop right there. So given that information, that with a little push higher in the dollar, that we might be reaching a supply level that prices are likely to fall at, let's go down and find some demand levels in the majors against the dollar. Here we are looking at the daily. Let's take a look at this larger intraday time frame here. Okay, the two areas of interest are going to be right here. Let me just draw these in just a second. Okay, now we'll look through a few of these, and then we'll decide which ones are the better ones. Okay, there you go. So if we focus on this 240 minute here, all right. Actually, let me do this. I almost forgot. I get so into these turning points. Let's find those levels on this time frame. Okay, let me get these on here. Let's focus on the Bollinger Bands today. So even when prices come down in this yen, hang on, and they pierce the lower Bollinger Band. Okay, I'm going to pull this up now. All right, so there's the yen. Now I'm going to put some let's put some levels on this. Now I'm going to draw one in here that is not really a drop-based rally. That one, and then I'm going to put the other one in. Okay, and there we go. Now capture the chart again. A lot of little clicks here. There we go. Okay. So I've got a couple little levels in there. Both, what they both have in common are they're the origins of pretty strong rallies, right? Okay. Now, I'd be careful with that top one. I'd be more excited about that bottom one. All right. Now, if the dollar proceeds to rally up to that supply level, we'd want to look and watch this yen and see if it's coming to either of these demand levels. If it is and piercing the lower Bollinger Band, that's a trade that I would be okay taking myself. Okay. Let's do the same thing in two other markets. All right, let's go to the pound. Let's get rid of some of these old lines. And let me blow up the pound here. Oops. Just a second. That's not going to be enough. Yeah, I'm going to a smaller time frame. This pound's going to be tough. I think we're going to skip the pound right now. We'll go to a small time frame chart of the pound on the other workspace. Let's just go over to that euro. I just wanted to find 2 or 3 against the dollar, just so we have something in the bigger picture set up for next week. Okay. Yeah, Daniel, we can look for some supply there in just a few minutes, but let's take care of this dollar opportunity, and then we'll go from there. So let me do this. Let me get a chart up here for you. Here's the hourly chart. Perfect. Okay. So as you know, the euro takes up the biggest slice of the dollar pie there. Okay. And the demand level in euro here is pretty obvious. Okay. It's the origin of where prices took off from here. So let's mark that in. You've got this level right here. Okay. All right, and you should have a nice big profit margin there, and let me show you why. So if prices end up piercing the lower band when they come down to that level and hitting that demand level, while the dollar is reaching supply, that's pretty much an all-star entry, right? That's what we're looking to do here, stack the odds in our favor. Okay, there we go. The chart is refreshed. And let me catch up here. Yeah, Van, most of the time you're going to see that. Yeah. Okay. Yeah, I mean, price is going to fall from wherever the supply is. And in euro, let's take a look. All right, so now the euro is hitting these kind of speed bumps over here. Let me take this down to a 30-minute chart just to take a little X-ray snapshot. Okay. Capture the chart again. All right, so we've got our level below in the euro. But what about a level above? If we think the dollar's going back up to that area and the euro's going to come down to here, where's it going to turn from? Well, when we investigate this area here, we see there's kind of a straight shot down right here. One of the things we've never really talked about at FX Street here is a strategy that we use in the trading room and online trading academy that I just told you the Bollinger Band is quickly becoming a very popular strategy. But one of the other ones that's probably been the most popular for a long time, at least a couple of years, is the trap. And we've got kind of that opportunity here in the euro. I'll show you. Okay, so so if prices are going to come down here, where are they going to turn lower from? If we investigate this area here that I'm pointing to, we certainly have this area up in here. Let me draw this in, and then I'll capture the screen. Stop's way too big for this one that I'm drawing in now, but it is a level, not one that we would necessarily take. The other one I would look at would be this is kind of a better one right here. Let me show you. All right, let me draw this in just a second. All right, capture the charts. There we go. So we've got some levels above. You should be able to see that now. Okay. Let's see, Daniel, track record. We don't keep we put a lot of trades out there. What we do is, I have an account that I trade for the XLT. We show that often. Does it include every single trade that's put out there in the XLT? No. A lot of them, but not all of them. And most of them are, I think we think back the last, 3-4 months, there's maybe been, 3 days where we lost some money, but the rest of the days are profitable. So, they're good. Yeah, they're good. Yeah. So there's only been, I think we've only had 3, maybe 4, but I think it's 3 losing days in quite a long time. But let me tell you, we're not taking trades at every single level. All right. Yeah. So let me point these out to you. Okay. Notice all these little kind of areas right here. See these little areas here inside the circle? Let me grab this again. Bill, it's always a little bit different. Some days 3 or 4, some days none. Okay. So take a look at that circled area there. Inside that circled area, we have a number of little demand levels, right? In other words, price is stuck around in those areas for a short period of time, and then you had a drop away from those areas. That suggests there's supply in there, right? That's why prices drop. Okay? Okay? But then, so that area that I wrote key supply, the reason why I wrote that is because of what's just below it. Notice we have all those little speed bumps of supply. So in that circled area, what's likely to happen if and when prices go up to that area, all right? Do you think it's going to be easy for price to get through that area, or you think it's going to be a little tough for price to get through that area, the circled area? What do you think? Yeah, probably a little tough, right? Because there's some sellers there. The chart's telling us. Okay, there's some sellers in that circled area. Therefore, you're going to use up quite a bit of buying. It's going to take more demand to get through that circled area than if those little levels were not in that circled area. Okay? Therefore, what I'm getting at is, what makes that yellow key supply level a level that I'd be interested in is that because of what's in the circled area below, you're going to reach that key supply area with fewer buyers on board. Okay? So another way to say that is when you have levels on top of levels. When you have levels on top of levels, it's a good idea to take that outer or distal level. Does that make sense? Okay? In other words, if it was just a straight shot up to that key supply level, it can work, and that's fine, and we like, that's fine. But when you have a little speed bumps of supply just before the place that you're going to sell short, that means usually that when you're selling short, you have fewer buyers right there. Is it okay? So in other words, think of the perfect trade, right? If you were to design the perfect trade, you would be the seller to the last buyer at a price level, right? Not the second to the last or third to the last, but if you had to design the perfect trade, you'd be the seller to the last buyer at supply, and you'd be a buyer to the last seller at demand. Because once that transaction takes place, then price is going to move in your direction, right? Okay. Well, can we figure that out and see that? Of course not. But so how do we get close to that? By what I just told you here. Okay. So in this case, price would it'd be tough to get through those little levels in the circled area. Ideally, we would be piercing the upper Bollinger Band when we hit that lower supply level there. The reason why the upper one, the one just above it, is fine, but the stop is so big because of those wicks. We're not in love with those wicks on the upside in that upper supply level. Okay? Does all that make sense, hopefully? I don't want to confuse anybody. All right. Yeah, Daniel, that level's fine. You could probably we can go down to a smaller time frame and find another area inside that. That's obviously a better area on the curve, right? It's higher up on the curve. Correct. Let me just try to read back. Okay. Well, because you let me show you real quick here. So if we go, let me just open this chart up. Okay, let's do this. Hang on, I'll show you. All right, so here's kind of an X-ray snapshot of that level. So I'm still kind of answering your question there, Daniel. So now that we've gone to a smaller time frame, maybe you make the upper level like that now. You see what I mean? Because now you're taking the extreme of that area with your stop just above the area. Okay, but if you make this whole thing the level, that's a pretty big level. Okay. All right, so I'll keep those on, and we'll okay. We'll come back to those at some point, if and when the market gets there. Now, let's take a look at one more market here, and then we'll go to a set of smaller time frames for some active trading. Here's one in the euro yen. Oh, we put this one in already. All right. Anybody happen to grab this one, by the way? I saw it just came back up into our level. That's the euro yen. So those are two levels here. Again, you want to see that price is piercing the upper band and hitting a key supply level. And the only other component that you need to do this is making sure you have a profit margin associated with your opportunity, right? You have to have a profit margin. Okay? All right. Let's look at that Canadian, and then we'll go to smaller time frames. Okay? And there's an old level in there. Let me get rid of that. Okay, here's the Canadian. I'll grab the chart for you. Okay, so as we talked about last time, we've got this big demand area that we're dealing with in the Canadian. Every time we dip into it, we rally out of it pretty strong. Is that where you entered that position? I forgot who got in that. Is it Andrea or someone? Is that where you kind of got into that? We've had this level in for quite a long time. But now what do we do with the Canadian? Let's take a look. Let me blow up the chart that we're focusing on today. We haven't spent quite enough time on this, but remember, the focus today is the Bollinger Bands, right? There was an old trade. It's actually a pretty good example here. If you could see this. This is a trade we did from the past. I just never took the lines off. Supply level over here. Rally up into this level, piercing the upper band, with the blue line as our target below. Okay. Oops, you don't see the chart? Sure, let me grab that. So yeah, this is that trade we had from a little while back. Rally-based drop. First pullback into this level, piercing the upper band with the blue line as a target below. Now, today, let's go to so Andrew, you must be looking at this right here. You're taking this level right here. Okay, yeah, let me grab the chart again. All right, so here's that level over here. Now let's take a really close look at what's going on right now. So we did pierce the upper band, so you're already short in this position, right? Is that what you're saying? Okay. Yeah, that's one of the things I was going to mention, Germal, there is, so the one thing you have to be careful of is the Canadian is pretty close to larger time frame demand. So the things you're probably going to want to think about, consider there are, should you pick multiple targets for this short position, or might it be a smarter move to get out of this, in one chunk at a pretty reasonable target? You know what I mean? Let's put a target on this chart. So here's the nearest significant demand below, okay? And I'm going to put the target just before that area, and then I'll recapture the chart for you. Yeah, exactly. So Andrea has the right frame of mind. She's thinking of this as a short-term trade. I would agree with that, again, because of where this thing is sitting in the larger time frame. Okay? All right, so we'll monitor that. And again, I put that blue line in there because that's just before the near-term drop base rally demand level, which I will also draw in. Okay, there you go. So let's see, show trade down to... Oh yeah, so what you want to do there, Harley, the way that we do it, and this is kind of how we started the session, if price is piercing the upper band and into a supply level, we sell short. If price is piercing the lower band and into a demand level, that's where we buy. Okay? All right. So yeah, nice entry there. All right, so let me take you over to the smaller time frame charts, just so you get a really solid understanding of this stuff. Just a second. This one just hit for us here. So this dollar yen, let me capture this. Same strategy, but this is how we apply it to the smaller time frames. As you can see, this dollar yen just hit a little while ago. Rally base drop on the 15-minute chart here. Well positioned on the larger time frame over here to the left. And of course, we have a supply level. We're piercing the upper band, okay, and hitting that supply level at the same time. All right. Again, like I started with today, right, that means that we're, obviously, if we're into a key supply level with a big profit margin on the downside, price is likely to turn lower. And if we're piercing the upper band, that means we're at least 2 standard deviations from the mean. Okay, so that's what helps stack the odds in our favor, right? Okay. So I've got a 2-minute chart, which actually I usually make this a 5-minute chart. I don't know why it's on a 2-minute chart. You can use the 2-minute chart. Honestly, I use that sometimes. Okay. But let me give a big note here, though, that you have to just full disclosure. When I'm short-term trading the currency markets off the 2-minute charts like that with this type of strategy, I'm almost always doing it in the forex futures, not in the spot forex. Okay, all right. You took the earlier one there, Janeda, the short. Yeah, it rallied right up to that area. So yeah, so I'm always doing it in the currency futures when I'm going down to such a small time frame. Okay. Yeah. All right. Anyway, so what we do is, kind of and this is typical. I don't know what happened to these charts. Let me fix this. So this chart over here is usually like an hourly chart, and then I've got like a 15-minute chart here, and then a really small time frame up here. Okay. Because you always want to know, because when you're looking at smaller time frame supply and demand levels, you always want to know where you're at in the bigger picture. Okay? That is crucial information. And then once you know that, throw the Bollinger Bands on there, find your levels on the small time frames, and take the trades that meet your minimum requirements, right? Let's take a look. I'm just going to pull up a different market here. Let me just kind of bounce around here. I'll usually run through my list like I'm doing now, just to find something setting up at the moment. Let's see if we get that. How about I'm sure the spread is going to be terrible, but the euro against the Aussie. If you look at an hourly chart, let me grab it for you. You can see it's kind of nearing that prior high over there. Let me just read back. Roadster, why the short time frames in currency futures only. Just because, again, that spot market is more of an artificial market usually created by the broker, where the currency futures, you're not trading against the broker there. Your orders being matched against other. It's more of a free market. You're going through the Globex system. Okay. All right. Let's take a look. We can look at the cable in just a second. All right. All right. So yeah, let's take a look. So we'll look at the pound. All right, so prices are piercing the upper band here on the 15-minute chart. So we've got two areas of interest here. We've got this area right here. Now, if you make it one big area right there, and then we've got this other kind of tighter area right up here, the origin of this drop in price. So here's that scenario where we have kind of two levels on top of each other, right? We want to make sure price is piercing the upper band. We want to make sure that we're nowhere near larger time frame demand on the hourly chart. Ideally, we're closer to larger time frame supply. Okay, does that make sense? Let me grab the chart though. Yeah, I'll refresh it. There you go. By the way, I put my email address in there. I just typed it in, sseiden@tradingacademy.com. I know we're kind of running out of time here, and want to make sure you had that. Yeah, so the whole point here, as you can see, is like we started with. The only reason why you're here is to gain an edge, right? Maybe you like hanging out. If you do, that's great. But the main point is you're here to have an edge, and that's why I always try to focus on things that have to do with creating that edge or attaining that edge. And the most important one is identifying your key supply and demand levels, not just any supply and demand level. And then things we can do to add to that and help stack the odds in your favor are bringing on the Bollinger Bands as well. Okay, and only focusing on them when prices are piercing the upper or lower band and into a level, okay? Yeah, the targets for these is going to be the same thing. So, like if you're shorting up in this area, your target's going to be a very mechanical way to do it would be having the mean price be one target and then the opposing demand level be the next target, right? That lower level, just because you have a low level on top of a level, but yeah, definitely the upper one here is the key one, right? In this case, we've got, right, rally-based drop is what we're looking for. This is a drop-based drop. Price is probably going to stall out here, if not turn lower, but remember, the higher probability level is not the drop-based drop, it's the rally-based drop, okay? The wick is to the left of that level, so I'm focusing on the price action around the origin of that drop, which is those 3 or 4 candles. Okay. All right. Well, hopefully that information was helpful. I know you've got another speaker coming up, and all right, you can use limit orders if you're doing the larger time frames, but not the smaller time frames. You're probably going to have to be there to push the buttons. But yeah, so. For those that are doing well with the whole supply-demand approach, nice job. But you also might want to add what we talked about today with the Bollinger Bands and just see how it works for you. All right. So have a great day, everybody. Thanks for your time. Have a good weekend.